Hello, and welcome to myfinanceteacher.org. Again, let's have a look at precious metals. We'll have a look at gold, miners, and silver. What do I see on gold right now is, as I've mentioned in the previous video, gold is starting a new short-term daily cycle, which is so far only 17 days old. However, the intermediate cycle is not very likely to have finished over here at the end of July. If the intermediate cycle finished over here at the end of July, that would give us an unusually short intermediate cycle lasting for only 113 days. Usually intermediate cycles last for around half a year. That's why I think the end of the intermediate cycle, which probably is still ongoing, is ahead of us. For that reason, I think that gold still has to come back perhaps to that support resistance at around 1750. The usual duration of a short-term daily cycle is around a couple of months. That gives us the expected time for the end of the short term as well as the intermediate cycle, perhaps sometime in the second half of August. In the very short term though, I think after more weakness maybe early next week, there is a chance that gold bounces up a little bit again to retest that resistance zone. As I mentioned in the previous video, the resistance zone anywhere between 1830 to 1860. Over the last week or so, gold did come to that resistance zone. It's pulled back on Friday, but I think there is another chance for gold to poke back up. That's based on the cycle duration. The cycle is still not very old, so the midpoint of the cycle is still ahead of us, and likely the top of the cycle is still ahead of us as well. Or perhaps gold will give us a double top on this short-term daily cycle before declining. So this is my most likely outcome. I would give it perhaps 55% chance. If this scenario is to play out, the RSI is not very likely to bounce that much further because the intermediate cycle still has to give us the end of the cycle with a cycle low. So perhaps another short-term poke up in RSI before a bit of a cool down again, perhaps into the second half of August. And over the last 2 to 3 weeks, RSI has already recovered quite a lot from oversold into nearly 60 at the end of last week on Thursday. So I think that's almost enough of a recovery in RSI before going down again into the intermediate cycle low. Moving on to the second likely scenario, I would give this scenario perhaps a 35% chance. The 35% chance is that the intermediate cycle did actually finish over here at the end of July. Although that gives us a short intermediate cycle lasting for only 113 days. It's still not impossible. The previous intermediate cycle actually lasted for only 99 days. But that was after a very long intermediate cycle lasting for over 200 days, where gold poked above $2,000. So as I said, on average, these cycles last for around half a year. So a very long cycle lasting for more than 200 days, together with a cycle lasting for 99 days, still brings you back to that average duration of around half a year. But still, a cycle lasting for 113 days is not very usual. So as I said, this scenario perhaps has a 35% chance. So it's time for gold to cool down, as late last week into Wednesday, Thursday, it got into the resistance zone between 1830 to 1860. It poked above the 200-day moving average, tested the 50-day moving average, and came down sharply on Friday. Plus, gold poked a couple of times above the Bollinger Bands, and the Bollinger Bands are not very narrow, so those pokes do have some meaning. Which means gold probably has to cool down maybe for a short term in this scenario, which itself is not extremely likely. So perhaps early next week, gold continues down a little bit, followed by a continuation higher with an ongoing short-term daily cycle, because the cycle is still relatively young. And then if we're in a new intermediate cycle, which started over here at the end of June, then the correction down into the short-term daily cycle is not going to be very severe. Maybe a correction down to 1800 before the second short-term daily cycle in the new intermediate cycle brings gold much higher, perhaps to that next resistance level somewhere between 1900 and 1920. Looking at RSI in this scenario, that would mean that very short-term oversold levels on RSI, which only lasted for around 3 days, were enough for the end of that intermediate cycle back in the second half of June. That's why I think it's not extremely likely. Usually perhaps you'd see longer period when RSI is into oversold territory. Look at the early March, where RSI was into oversold area for around a week or so, followed by another double bottom on the price chart into late March. So again, this scenario, perhaps 35% chance. And the remaining 10% chance for an even more bullish scenario where we see a potential inverse head and shoulders developing on the weekly chart on gold, where the neckline would be somewhere around that 1920. That's actually pretty close to that significance level of the previous all-time highs in gold from 2011. So this scenario does kind of agree with the previous one, where the intermediate cycle is relatively short and it finished in late June. And in this scenario, the first short-term daily cycle of this new intermediate cycle pushes gold much further than in our second scenario. This third least likely 10% chance scenario is of course the most bullish. Some of the projections for the target moves based on the height of this head would be a breakout of gold above this neckline by around $200 to $240. That's based on the height of this head, which is around $240. The difference between the neckline at 920 and the head level at around 1680. So $240 target move above the neckline would give you a very attractive gold price at around $2,200. So do you think we're going to get a Christmas present like that by the end of this year? Let me know what you think in the comments below. Moving on to the miners, they do support my most likely scenario of lower prices into the intermediate cycle low, perhaps somewhere into the second half of August. Why do I say so? Is because the miners are kind of underperforming gold itself. While gold bounced since late June to retest the 50-day moving average, miners were kind of sideways all over the last month or so. And while I do expect another bit of a short-term bounce in gold, that perhaps will bring miners a little bit higher. Personally, and in the model portfolio with the members at myfinancesteacher.org, I'm still holding a full 25% allocation of the total portfolio to precious metals. And if we see a bounce in GDX closer to that 200-day moving average, perhaps I'm going to reduce that allocation. Quick reminder, my total portfolio is split between precious metals, cryptos, general stock markets, and energy, each accounting for about 25%. Now, RSI as well is relatively weak on GDX, as you see. It couldn't even hold the neutral levels around 50, came back down to 40. So not a very positive look here as well. And Bollinger Bands are narrowing quite a lot, as you see, because GDX has been going sideways for about a month. And very narrow Bollinger Bands usually before some sort of a violent move. Now, based on the duration of the ongoing cycles, the violent move is more likely to the downside rather than to the upside. We see the 200-day moving average is sloping down, even the 50-day moving average is sloping down, and the 20-day moving average is also sloping down. So any sort of a violent move coming out of a narrow Bollinger Bands, I do think is likely to the downside. After all, as I said, the intermediate cycle, if it's still going on since March this year, is 130 days old. That's very old, and we are coming up to the intermediate cycle low perhaps in another few weeks. And talking about the short-term daily cycle, by the time GDX maybe bounces back up to the 200-day moving average, the daily cycle will be near its midpoint, and it perhaps will be time for some sort of a decline into that daily and intermediate cycle low. But if GDX reaches that support resistance zone around $31, this has actually been support resistance zone all the way since quite a long time ago, for a few years. then I think that would be a very nice, very attractive buying opportunity in the miners. Next, moving on to silver. Over the last 8 to 9 months since August last year, silver has generally outperformed gold. While gold declined quite a lot from over $2,000 down to under 1,800, silver has been just mainly going sideways. But over the last month or so, silver has underperformed gold in the shorter term, while gold has bounced a little bit, as you know, from around 1740 to around 1840. Silver again has mainly been going sideways, and on Friday it lost the 200-day moving average. We see repeated tests of this 200-day moving average, and as I've mentioned in some of my much older videos, repeated knocks on the support or resistance zone makes it likely that the support or resistance zone is going to be broken. Looks like it's broken on Friday. I do expect weakness on Monday. Maybe a short-term bounce into the end of next week, but generally perhaps a bit of a decline in silver over the next 1 or 2 weeks. RSI, again, doesn't really show us any exciting stories over here. It's been just under the neutral level for a couple of weeks. And if the decline in the silver prices is not really very drastic over the next couple of weeks, perhaps RSI will give us a positive divergence, where a lower low on the silver price will come with a higher low on RSI. That would actually be a very nice signal for an intermediate cycle low. Next, let's have a look at interest rates and how they might also play a role. What I see on interest rates is that they lost this 200-day moving average. The Bollinger Bands are widening, but I still expect another poke below the Bollinger Bands. So while that happens in the short term, perhaps over the next few days, over the next week or so, that's when I expect, again, a bit of a recovery in gold price. But those repeated pokes below the relatively wide Bollinger Bands are likely to create some sort of a bounce in the interest rates sometime into that second half of August. And perhaps over the next 1 or 2 weeks, we'll see a positive divergence between the prices on interest rates and RSI. And that bounce in interest rates is what is likely to drive gold back down into that intermediate cycle low, again, perhaps into the second half of August. So these are the 3 scenarios that I see for gold over the next short term, that's over the next several weeks. So most likely down, 55% chance for that. But there is also a bit of a chance that gold is going to be relatively strong into a new intermediate cycle. But while in the short term, the balance is to the downside, in the longer term, over the next, half a year, 1 year, 2 years, I'm really positive on gold. Look at this correlation between that's TIPS, Treasury Inflation Protected Securities, in blue, and gold price in gold color. Generally, as you see, these two have positive correlation. Actually, the correlation coefficient is shown here at the bottom of the chart. This is a 20-week correlation, generally positive, although sometimes there are periods of short-term negative correlations between these two. So usually they move together up and down. Over the last half a year or so, gold has been underperforming TIPS, and there was even a negative correlation in early this year. But correlation has turned back to positive over the last couple of months. So I actually see this as a very good potential for gold to catch up with the TIPS to restore this positive correlation and to restore their tendency to move together. We see TIPS already making higher highs while gold is still far from its higher high. So it looks like gold is relatively more attractive here out of these two correlated assets. And another story that you can get from this chart is that if TIPS are rising, these are Treasury inflation protected securities. It means that the market might actually expect higher inflation in future, despite the Fed's persistence in claiming that, oh, no, inflation is only transitory. So if markets do switch to disbelieving the Fed, to a conviction that inflation is here to stay, then that, over the mid to longer term, is going to be very positive for precious metals. Let me know what you think about that in the comments below. I would also appreciate if you hit that like button, of course subscribe to the channel so you don't miss any of my new videos, and please share this video with some of your friends. Have a nice weekend and good luck in your trades.